Hey, Harlan.
Hey Mike, how are you today?
Doing great. And you?
I'm doing great too, and we're approaching the end of the year, aren't we? And we got some suggestions for people today as they approach the end of their year too.
That's right. We want to help save people some money at the end of the year.
Yeah, so I know you and I've talked about this. Why should people want to save money tax wise before the end of the year here?
Well, there are some moves that have to be done before year end in order to take advantage of them. So why don't we just jump right into it?
And what's your first idea?
First one, invest in a syndication that gets bonus depreciation.
Bonus depreciation. Just explain that for folks just a little bit here.
Okay, when you invest in real estate, we get something called uh, depreciation. And that is typically so we can write off the value of the property of the improvements over 27 and a half years. With bonus depreciation, we can accelerate that and you get to write off this year up to 60% by the end of the year.
Okay, so before the end of the year here, to get into a syndication might give you some additional depreciation, which would reduce your taxes, huh? Reduce the taxable income.
Right.
Very good. There's a good one. And we can help with finding that right syndication for you if you're not sure how to do that. Good. And
Right.
what's your second idea?
The second one is converting retirement accounts and investing in real estate.
Converting a retirement account like an IRA or what?
Right. So we're talking about like an old 401k, convert that to a self-directed IRA.
Self-directed IRA. So right now, if it's not self-directed, then they've just put it in some mutual funds and it's sitting there and either making money or not. And
Right.
self-directed means you get a bit more control or a lot more control over what you invest in. Okay.
And some of these are what we call old 401ks because they are left at a previous employer. And that's where you're just left with whatever that employer allowed you to invest in.
Okay. So you're free to convert it. It's hard to convert a current uh, 401k, but
Correct.
an old one, convert it, self-directed, and then you can invest in whatever. I mean, there's some limits, but real estate for sure you can invest in with your 401k. Many people didn't know
That,
that.
that's right. So you can invest it in a syndication.
Yes. And again,
And if you are, uh, for example, you might be able to do a solo 401k, which is even better. So you can convert from a 401k to previous employer to a solo 401k. So that's another type of conversion. But either way, the important thing is to move the money to where you have control over the investments.
if that's important to people that are listening to us, more control over your investments, get with your tax advisor, probably an accountant, and see about converting your 401k, an old one, into a solo or a self-directed. Good,
Right.
good. And a third one you had here today, again, this is something you're kind of an expert on.
I like the idea of converting traditional accounts into Roth accounts for future tax-free income.
Okay, just quickly, the difference in a traditional account and a Roth account is what?
In a traditional account, the money goes into the retirement account and you get a deduction on your uh, total income for the year. So
Mhm.
you get the deduction then, and you end up paying taxes when you take the money out. So it might be at a lower tax rate.
Yeah, and for those that are approaching retirement, to be in a Roth might be a better place to be than in a traditional one when it gets to that point of required uh, pulling money out of your account. Yeah.
Right. So in the Roth accounts, you have paid the taxes up front, and then the money comes out tax free. So we like the idea of converting a traditional account to a Roth so that you get more favorable tax treatment in the future, or actually comes out tax free.
Yeah. Tax free is good in the future. And this is kind of forward thinking and long-term thinking here that might do any of these three that we've identified today. Invest in a syndication, reduce your taxes this year through the bonus depreciation that's available. Second is to convert an old 401k, for example, into a something you can control, a self-controlled IRA or 401k, even a solo one you talk. And the third is convert some of your traditional into Roth now while you have that opportunity and save money in the future.
That's right. And all three of those have to be done before December 31.
Whoa, that's just 6 weeks away, and probably better to get at it right now rather than wait till middle of December to start thinking about it.
That's right.
And we can help with, if you're looking at a syndication, we've got some coming up here that we have vetted and are excellent syndications out there, if you'd like to talk about that. And Mike, they could also download something that we've produced that might help them as they're anticipating retirement. What's that?
That's right. They can go to the website, www.attuneinvestments.com, and download a free copy of our ebook, Three Keys to Unlocking Your Retirement Dreams.
Yeah, and we'll put up that website in a little piece after we close out this conversation with each other. Hopefully this was helpful. I sure learned some things today again, Mike. Thank you.
All right. Thank you, Harlan.
All the best. Bye-bye, everybody.